Hey everyone, this is Mark from Stocks and Cash. It's Wednesday, March 21st, 2018. I'm here with your market update video, talk about my holdings, and then talk about some potential trade setups for tomorrow. So here we have the SPY, had a doji type candle today, maybe a gravestone-ish type candle, kind of a bearish sentiment type candle. The FOMC or Federal Open Market Committee issued a statement today raising interest rates, and that happened around 2 o'clock, and the markets became pretty volatile after that time. So let me just kind of zoom in and show you that. So here is today's price action. Let's see, where are we? Here's the 930 candle way back here. You can see we kind of went up a little bit. We had a high of around 272.30 prior to the results coming out, and then the results did come out, and we kind of were all over the map for the rest of the afternoon. And you can see that towards the end of the day, in the last half hour or so, we traded off pretty strongly. So what does that mean for us? Well, let's go back out to our daily view. And the answer is, we don't really know what's in store for us, but we did break this ascending trend line, yet we are above this support zone here at 270. And I've drawn it based on this large bullish candle here, as well as the lows that were put in back here by these candles. Now we've kind of blown through it twice, so 270 isn't a truly critical number, but it's still some minor support that we can look to. The next support level would be this 100 simple moving average. Then we'd come down to the low of this candle here on the 2nd, followed by this low here on the 9th, if the markets were to roll over and push further down. Now, I'm not expecting a huge sell-off like we saw back in early February, but I can see us, if we get through this 100 simple moving average, I can definitely see us coming back to test the 265 level, and again, perhaps the excuse me, the low here, which is 253 or so. So that's not for certain. Yesterday I was kind of more bullish, and we were starting to trend that way, but then after those minutes came out, raising of the interest rates, we, as I mentioned, sold off towards the end of the day. So we do have some support here. I am thinking we're going to come down and at least test the 100. Maybe we'll come down and test the low of this candle on 3-2. Not quite sure what can happen. And of course, we could always bounce. But based on the way the market closed today, and I believe this has kind of been the reaction the last few times that the Fed has spoken, you kind of get a little pop, some indecision, and then just a bit of a sell-off, each time the rates are getting risen. So I wouldn't be surprised if we had some bearish price action over the next few days, Thursday and Friday, perhaps even going over into the weekend. Again, I wouldn't be surprised if we come down and touch this 265 level or so. Probably not, well, it could be the end of this week, but I'd be thinking more early next week. So we'll see how everything plays out. Let's take a look at the Qs. There we go. So the Qs had a similar doji type candle today. We came up and touched basically the 8 EMA, got rejected by it as well as the 21, and our support levels are a little different here on the Qs compared to the SPY. We have the 51 EMA to hold us for support, the 100. We still have this ascending trend line, and then we have this, we still have this candle on the 2nd, the low of this candle, as well as this low all the way back down to 150 or so. So there's definitely more support on the Qs, but if the SPY rolls over hard, generally the Qs will follow. I can't imagine a scenario where the Qs would be up strong and the market, the S&P and the Dow are down significantly. So, and one thing I didn't mention on the SPY, I'll go back to it, but we had, the indicators, the stochastic indicators are bearish. MACD is bearish. RSI is, bearish to neutral on the Qs, and they look pretty similar on the SPY. So let's just jump back to that real quick before I talk about holdings. So again, you can see the Stokes are clearly bearish. MACD is clearly crossed over bearishly, which it hasn't done, despite, since it had its sell-off back in February time frame. It's gone through this kind of rally-ish looking, awkward rally, but it's been putting in, put in a low here, put in a higher high, a higher low, a higher high, barely, and we're at a higher low right now if this is the bottom of this move, but if we break below this low, we'll be putting in a lower low, and that could be the start of a downtrend, another downtrend. So, pretty critical where we're at here to see where we go from here. And again, the indicators are showing some bearish sentiment, so I'd be a little careful if you're long on positions, at least in the short term. Let's take a look at holdings. First Solar. So we came up and tested this price level here, which was the previous 3-year high back in March of 2017. So, March of 2017. No, I'm sorry, March of 2016. Sorry, so this is 2 years ago. We hit a high here. We've come back and tested it again today. A little more than 2 years later. I ended up taking profit. We're getting a little ways away from the 8 EMA. Nothing too concerning, truthfully, but the fact that we had this resistance level here, I didn't feel comfortable still being in the trade. However, I am looking at First Solar being long, so I am planning on getting back in at some point, whether it means coming down and testing the 8 EMA, or whether it means breaking out through this recent high of 76.61. I'm still long on First Solar. I just wanted to lock in profit from where I'm at. So had a 38% gain on that trade. Pretty happy with it. And we'll see if we have another opportunity to get back in. Another trade that I'm in is Pepsi. Mentioned this one a couple days ago. It's been having some pretty clear bearish action. More of it today. It looks like MACD is starting to roll over and cross. Hasn't actually done so yet, but it could. So my first target here is around 107. Probably get her out around 150 just for some cushion. And then the next targets would be 102.97 and 97.57. So I do see there being a lot of downside on Pepsi if we break this low here. So I have 2 calls. I'll sell those 2 calls. If we break this low, I might get into a new position and see if we get down to targets 1 and 2. Although if I was to do that, I would expect that the overall market would probably be rolling over as well. So keeping an eye on that. And certainly if the market does roll over and we touch this level, but it's moving quickly through it, I'm not going to necessarily get out of my position. I'd probably see if we come down to this first target here. Again, that would assume the market is really selling off and we're having some big bearish candles like we saw back here on the 5th. So PepsiCo is still looking pretty good. I'm liking that trade. Going to let it run a little bit longer. And currently I'm up about 18%, so pretty decent trade there. Let's take a look at some potential trade setups for tomorrow, most of which are bearish, unfortunately. That's just kind of my sentiment. There's a couple that are bullish. I'll look at those right now. And these are ifs. These are not 5-minute. These are at the end of the day if we break out. So LULU, once again, this thing has been meandering a lot over the last, 3 months. Still hasn't, well, it broke out here, but it failed, and now it's trying to break out again. Today it failed even getting to the breakout level. Let's see if we get a close above this breakout level of 81.80. If we do, potentially we can get into the trade. However, if the overall markets are rolling over, I would not want to get into a long trade on LULU. Just my opinion, my preference. So if you're confident getting into it, if we do get a close above here, even if the markets are rolling over, then feel free if that's what agrees with your trade plan. But I'd be very cautious about going against the overall market trend on individual stocks. And then NVDA, I'm trying not to get emotional about this particular trade because it looks like such an awesome setup, but we still need confirmation. We need it to break through this level here of 250. It was above it for a little while today, couldn't get the close. If the markets roll over, this may not actually break out at this time. Maybe we come back and test this ascending trend line here. We'll have to see. But again, I would not personally get into NVIDIA unless the markets decide to rally and rebound. So we'll see what happens over the next few days, but I'm a little cautious on this one, and again, I'm afraid to get too emotional because the technical analysis looks so perfect for a breakout. If the overall market isn't cooperating, I find it kind of risky, and it's probably not something I would get into. So we'll see what happens there. Now let's look at some potential shorts for tomorrow. Apple is an excellent example of something to short. You can see that we had this pretty much bearish candle after bearish candle, had a little reprieve here, more bearish candles, and then finally we had, this big rally, fake rally candle, further sell off, and then finally we bounce back. So, I'm not saying this is going to follow that exact same trend, but I do think we at least come back and test this 167.5 level. We're currently at 171.27. You could put your stop at the high of the first 5-minute candle, assuming that we get a close below that first 5-minute candle. See if we trade back down to this 167.8 level. If we break through there, there's not really much holding us up to come back down and test the low of this bullish candle, or perhaps even the full retrace back down to 150. So certainly lots of bearish sentiment in Apple. You can see the Stokes are clearly bearish. You can see volume was pretty strong today. MACD is looking very strong in the in the bearish crossover. RSI is looking bearish, so I don't see a lot of good things happening in Apple right now technically, and I do see especially if this 8 EMA crosses. So that's something that I tried to watch too. Okay, so when the 8 EMA is clearly above all of the other exponential moving averages, it's usually a good sign to buy. It was, I guess this is not the greatest example. Maybe here we kind of crossed. We were up above the 21 and the 55. We crossed below it, and then we kind of bounced, and now we're above all three exponential and simple moving averages on this particular candle here. Yes, we gapped down because of earnings. We kind of meandered a bit, and then we popped. So on this pop, you can see that the 8 EMA is clearly above these three lines, and that would have given us further confirmation, in addition to the fact that MACD was crossing over bullishly, the Stokes were bullish, RSI was bullish, and then this candle was so strong, this could have given you some indication that we were on our way to make a nice move. And then we kind of consolidated, and then look, once we crossed below the, well, first if you want to say we crossed below the exponential moving averages, then we broke this low here. Maybe you could have shorted, you could have had an idea that we were going to go lower on this candle early in the day and get a couple of bucks down on this move here. So, and then we kind of cross back up again over here. So I'm not saying that you have to wait for the 8 EMA to cross over all three of the moving averages, but it is a decent indicator to, at least when it's crossing and price is above it, that okay, I'm looking pretty bullish. When it starts to roll over and cross those other lines, then you can say that it's looking kind of bearish. Now clearly we came down, we bounced, and then we rallied, so you wouldn't have wanted to hold all this time, because price was also getting above the 8 EMA. So I guess that's the other part of it as well, right? So when the actual candles are below the 8 EMA and the 8 EMA is crossed through all of these other moving average lines, that's an indication that it's looking in one particular direction or another. So in this case bearishly, and then in this case bullishly. So just another tool in your toolbox to kind of analyze a stock and see if it's something that you want to get into. And again, with the 8 EMA starting to roll over and potentially crossing the 21, I do think that there's some downside approaching an Apple. And look, there's a gap here that I just noticed. So from 214 to 215, gaps do tend to like to fill. We haven't filled it as of yet. This would be an interesting time to come down and test this gap here at 167.55. Whether we hold or not would remain to be seen. And as you saw in the SPY, we don't necessarily need to fill this gap. We may not completely fill it. There's still an open gap around 280 on the SPY. It was partially filled, so gaps don't always have to fill, but they do tend to like to fill. So I do think 167.55 is a good first target on Apple. That was a mouthful. Let's move on to the next stock here, McDonald's. So McDonald's was in this downtrend, tried to break out of it, hit this descending trend line, or I guess it put in a point to draw the descending trend line. I believe this is earnings gap. We filled the gap on earnings. We kind of touched the 55 exponential, and now we're resting on the 21 and the 8. So if we close below this level here, let's draw it. If we close below this level, or if we want to be really conservative, if we close below the wick, the lower wick on 314, which is around 157. Sorry, let me zoom in a little bit more. 157, okay, 157.05. Then we can see if we can come back down and test this low here at 146.96. So be looking for a close below this wick here, and if we get it, and let me redraw these fib lines here too, because this is the new retracement that we're looking at. We're looking at it bearishly, so and you notice that this first fib line lines right up with this support that I drew here based on this candle. So if we get a close below here, we do have some support based on the fibs, but I can definitely see McDonald's rolling over further if the market also rolls over. So target down to 147 essentially. We're sitting at 158, so it's about a $10 move. Very low risk for a very high reward if the markets do roll over. So I would be cautious making that trade. Again, I would want to see a close below 157 before making it. But if we do get a close below 157, you can put your stop right above it somewhere, maybe 157.50 or so. Or if you have more tolerance to risk, maybe at the high of this candle, which is 160.41, so maybe 160.50. That's your risk. And your reward is all the way down to 146.96, so basically 147. And of course, you can see that we have further targets if the market really rolls over at 142.6 and 137 essentially. And there's not too much holding us up from there. So we could draw a support level here based on this low, which as you can see lines up with this fib retracement level. So there's a lot of things lining up on this McDonald's chart. Some is support obviously, but just the overall trend of McDonald's is looking kind of bearishly. Now, MACD has not crossed over yet. That's usually a good indicator to see it cross over, although it doesn't always work. As you can see here, we crossed over, and it was a fake breakout, and it ended up rolling over some more. So MACD is a pretty reliable indicator, but not the end-all, be-all, as I just pointed out here. So if this starts curling more and starts to cross over or approaching the crossover line, you can have some confidence, I think, in shorting McDonald's, again, assuming that the overall market is participating in that rollover. So let's see what happens with McDonald's, but it's looking like a decent short, again, with a close below 157. Couple more here. Wells Fargo, I pointed out yesterday. I'll just quickly point it out again. Basically a double bottom. If we break through this low here, we have targets below of 51.6 and 47.56. If we look at the indicators, they are bearish, so I do think there's more downside on Wells Fargo, again, if we break through this level. A couple others here. Verizon, it's another one that I talked about yesterday. You can see that we did get a close below this recent low here at 47.47. I did not actually get in, but if the markets start rolling over tomorrow, you can see MACD is trying to cross over bearishly. Stokes are bearish. RSI is bearish. I think this is a good trade down to 45.55, about a $2 move. Then ultimately down to 42.96, which coincidentally lines right up with this low here from 710. So let's see what happens on Verizon tomorrow, but that's something to keep your eye on as well. And lastly, let's look at Royal Caribbean Cruise Line. We put in a high here, and then a low, and then a higher low, sorry, a lower high, a lower low, a lower high, and let's see if we put in a lower low. We had a very strongly bearish candle today, although volume wasn't too strong, but we did close below this wick here on the 19th, so this short-term trend is obviously bearish. We did fill a gap and push through it as well, although that gap was actually filled by this candle, so the gap was previously filled. It bounced, got rejected on a breakout here, and now I think there's some downside to Royal Caribbean. So this would be a first 5-minute type trade, again based on what the overall market's doing. If the market start to roll over, this will probably follow with it. The low here was 123.08. The close was 123.37. So let's say 123 down to a target of about 120, and then additional targets of 115 and 110 essentially. So certainly some downside that we can see on Royal Caribbean. This ascending trend line was broken here in early March. It rose above it and we just broke it again. So this trend line is not reliable any longer in my mind, especially if we come down and break these lows here. So that about wraps it up. Sorry for the rambling on the Apple and the McDonald's stocks, but hopefully you got something out of it. If you have any questions or concerns, please feel free to post in the comments section. Happy to hear from you. Have a good night and good luck trading.